Well, another week goes by, and once again, we are finishing right at the lows for this week as we continue this correction below all the moving averages here, below the declining 40-week now. And you can see this did happen on higher volume. Hey everyone, my name is Richard Moglen. Welcome back to the Stock Market Outlook video sponsored by MarketSmith. As usual, we'll run through the market indexes, leading stocks, talk about a few different sources of sentiment, and that's definitely interesting during this time, during this correction. And we'll round things off with the IBD Big Picture article and finally the Wishing Wealth GMMA signal. And if you do enjoy my analysis, please go ahead and take the time right now to leave me a like down below. It really helps me out and my channel. And of course, subscribe if you want to see more videos just like this one every single week. Diving into it, let's take a look in MarketSmith on the daily chart here now. Once again, we're below all the key moving averages. This is the 200-day moving average, 50 SMA in red, and the declining 21 EMA in purple here. And you can see we're just in a downtrend here below all of them, and maybe getting a little bit short-term extended from that 21 EMA. So maybe we get some consolidation, but right now the trend is just down, and we'll just have to see where this takes us. You can see that we had this big reaction candle, super strong close here right after that Fed announcement on that Wednesday, but everything reversed. We had a gap down on Thursday and then finished pretty much right at the lows, negating that entire day's gain pretty much, and some fall through to the downside here with a close pretty much mid-range in this candle, this bar here on reasonably high volume. So this is definitely a head fake here. I'm sure a lot of people thought this was the bottom, but that kind of goes to show you that it's so hard to catch those absolute bottoms, and you're better off really waiting for that trend to kind of confirm via a fall through day or some type of higher low setup. And that's kind of your best bet in terms of deciding when to really become aggressive in this environment. Because if you're just trying to play every single turn on a daily chart, or even worse on a 5-minute, 15-minute chart, you're going to chop yourself up so much, and you're better off basically sticking to those higher time frames and waiting for really the market to force you back in based on feedback from pilot trades, the action in the market indexes themselves, getting back above rising moving averages, as well as, of course, the actual stocks, the setups. We want to see leadership groups emerge and really start to trend and diverge from this overall correction right here, this downtrend in the market. Once you start to see that relative strength pop up, we start to see those relative strength lines increasing once again on growth stocks in general. That's when you can start dipping your toe back in the water, and we can start kind of testing trades and getting aggressive once again as that kind of pays off for us, and we see that in our equity curve. With that said, let's move on now over to TC2000 and go through a few different indicators I think are really interesting to watch during this time. All right, so first of all, here we are on the Nasdaq Composite once again, this time in TC2000, and we're taking a look at basically the percentage that this index is, the closing price is from that 21 EMA, which is this purple line here, and down here you can see the percentage plotted here. So at this point, we were about 5.7% above that 21 EMA, and then you can see right now we are about 6.17% below that. So looking back historically, during corrections, we see this dip below this kind of 5% line, but in general, kind of in intermediate corrections, that's pretty much as bad as it gets, at least in the short term. But during those more extensive corrections where we see that really strong flush to the downside, which is always a possibility during these corrections, like we saw in 2018, 2020, we can get significantly below that 5%. So don't let this lull you into having a sense of security where we have to bounce at this point. We have to revert to the mean. Always keep kind of an open mind and just use this as a guide. If we do get a reversal here, maybe we've got some type of tradable rally like we saw back in this area right here. But once again, just something interesting that I'm watching as of this moment. Along those same lines, we've got the percentage below the 10-week moving average. So this is kind of a longer term view here. And going back in history all the way to 1994, you can see that during these corrections, we often get 10% below that 10-week moving average on kind of the worst flushes, where we really get extended to the downside and have that last leg down. And we saw that way back here in 2008, 2009. And you can see that in 2018, we got down to just under that 10%, in 2020, well below that. And it really shows you kind of the acceleration that can happen under that 50-day moving average or 10-week line. And going back in history during those intermediate corrections, 10% is kind of that point where you start looking potentially for a tradable bottom. But once again, during those worst corrections, those last flushes, we can get a lot further down below than that. Also, I just wanted to show you guys kind of the volatility in the overall indexes here. Once again, we're on the Nasdaq Composite. Down here is kind of the 4-day range in terms of volatility. So since this bar is 7.75, that means over the past 4 days, the kind of average range up and down has been 7.75% in this index. So that's definitely pretty high. And that goes to show you that it's hard to position either to the long side or the short side because there's that incredible volatility. Obviously, this day we had that quick move up and then gave it all back the next day. So that's why volatility is so large. And this is pretty standard in terms of corrections. We often see volatility get to that 7, 8, 9% at its worst. But once again, we can get an incredible spike like we saw in 2020. But just going back on the daily chart, you can see back in 2018, we saw spikes to that kind of 7% range, 7.5% in 2018. That bottom in December, once again, 7, 8%, and we're just kind of at that level right now. So things are about as volatile as it gets as of this moment. I think this is just an interesting thing to take a look at. And let's just zoom on out to a weekly chart, and you can see on a weekly basis how this plays out as well. We saw huge volatility during that kind of 2000 correction, during that first move down. And then once again, we saw a big spike in 2008. So another thing to look at. And lastly, I wanted to show you guys the Webby RSI, named after Mike Webster, which is basically the percentage above that 21 EMA, but only showing it to the upside. So if we're below it, we're at 0. And right now we're just trending below it. And we did have a nice tradable bottom here, basically back in mid-March here. And actually, lastly, I want to show you guys an interesting trend tool. If you haven't used it before or seen it before, this is the GMMA chart for Guppy Multiple Moving Average Chart. Basically, we've got a bunch of exponential moving averages, either plotted in red if they're more short-term and blue if they're more long-term. And you can use this on any time frame, and it's just a quick and easy visual way to identify the current trend. And basically, if there's this red, white, blue pattern where we've got the red moving averages trending above white space above the blue ones, we're in a strong uptrend, especially if we're above it in terms of the closing price. And if we're in a downtrend where the blue is above white, above the red, it's likely not the best time to be taking longs, just because we are in a corrective environment. And basically, the trend is not with you, the trend overall. And as I said, you can use this on basically any time frame. I like to take a look at it on multiple ones. So the daily chart, the 65-minute chart is really great for my time frame or swing trading. You can see this kind of identifies the change in trend here in mid-March. And you can see it kind of identified that short-term trend change here on the 5th of this year. So this is really interesting. And you can also use it on a 15. I don't really recommend going much lower than that just because the trends are a lot more volatile there. But the 65-minute time frame is great for swing traders. Daily and weekly is great for those position traders and investors. And you can see that even on a weekly chart, we're in a downtrend here during this correction. So it's a cool tool, especially if you're kind of new to trend following. I think this is a nice, quick, and visual way to identify the trend. So hopefully this is helpful to you. And all you have to do is basically make a bunch of moving averages and plot them with different colors. So with that said, let's move on back to MarketSmith and go through the rest of the indexes. All right, so bringing up the S&P 500, this looks pretty similar to the NASDAQ, but a little bit stronger. We have undercut and closed above this significant low here. So I'd love to see us stick that and maybe start an uptrend from this point, but we have to get above a rising 21 EMA for really a rally to really take hold. And once again, I'd love to see us kind of move back above the short-term moving averages, kind of retest them to the downside, bounce upwards, and that kind of confirms that kind of higher low setup where we potentially start a new uptrend. But we have to get back above that 21 EMA, 50 SMA, and of course that 200 SMA. And from this point, we'll just have to see where this goes, whether we continue to hold this level or start to see a leak below and continue trend to the downside next week. Or on the other side, do we start to see kind of that higher low setup and pattern form as we start to build out the right-hand side of a base. Moving on, let's take a look at the IWM, the Russell 2000 in general. And you can see that the arch rating is pretty poor, 41. Small caps have been underperforming, and we're making new lows and just in a downtrend on this index. Once again, that declining 21 EMA was resistance, and we have a decent amount of work to do before this really starts a new uptrend and gets back above those moving averages. Looking at the Russell 2000 Growth Index, the IWO, this looks pretty similar. Breaking these lows looks a little bit weaker even, and we're below all those key moving averages. Not too much different from last week. So you've probably heard me say this same thing over and over again. We're below those moving averages. We are in a downtrend as of this moment. both on the short-term basis, the 21 EMA, as well as the longer-term 200-day moving average. Lastly, we've got the FFTY, the Innovator IBD 50 ETF. And this looks basically the worst of all of them. We're in a significant downtrend, and you can see there's a lot of space between price and that 21 EMA, and we're below a declining 21, 50, and 200 SMA. And this is just an ugly, ugly downtrend. And you can see the arch rating is only a 25. So overall, in terms of the indexes, we're just in a downtrend correcting, and we'll have to see, especially on the S&P 500, if we can kind of stick that landing here, hold this key level. And also I'll be watching some other key levels right here. If we do get a significant undercut of these lows or rally back above on huge volume, that can mark some capitulation. But we're just not seeing that just yet. We haven't seen a huge spike in selling on volume. So with the indexes covered, let's move on over to some growth stock leaders. And right now they're pretty much leaders to the downside. But let's go ahead and start with Tesla. Everybody always wants to bring up this chart. And overall, this is faring better than most stocks. We're below that 200-day moving average and kind of decisively below it now, but we're above these lows. So we are forming a potential higher low here, but we have to get back above this 21 EMA and kind of get back above the 21 EMA, 50 SMA as well, and kind of start out the right-hand side of that base. Right now, we're below a declining 21 EMA. So until kind of it proves itself, we are in a downtrend as of this moment. I'd love to see us stick above 800 to the long side. And you've got some structure here that could kind of reconfirm to the downside, especially this low, if we do see significant weakness next week. So that is Tesla right now in a downtrend, not in a leading group as well. And moving on, let's take a look at another one of the kind of liquid leaders here, NVIDIA. And semis have definitely been under pressure. You can see that we're undercutting these lows compared to Tesla, and we had a significant break here of this tightness. And now we're just kind of forming another consolidation, another potential bear flag, or a potential bottom of the base. And I'd love to see kind of a big capitulation day, undercutting these lows and then finishing strong here. And that could mark the bottom of a potential base. But we won't know if that's going to happen until it actually does. And we could just continue to trend below the 21 EMA, 50 SMA, and now 200 SMA, which could start curling downwards as this potentially starts a stage 4 downtrend. So no one knows what's going to happen. We've got earnings in 19 days. And speaking of earnings, AMD, the kind of sister stock to NVIDIA, reported very strong earnings here, accelerating earnings, sales, and also improving after-tax margins, and is definitely faring better than NVIDIA. You can see we're up over the past few days here, up against that 21 EMA, which is now curling upwards, but we're still in an overall downtrend below a declining 50 SMA, below that 200 SMA as well. So we really need to start kind of building out some higher lows, get back above that 50 SMA, have that curl up under price. That's kind of what I'm looking to see. But I'm sure a lot of people are watching this kind of DTL that you can draw here, and we'll have to see whether price, if it gets up to that point, will react to that key level. So that is AMD. Also taking a look at some smaller cap names. We've got GFS in that same sort of sector. Overall, it's outperforming over the past 2 weeks. You can see that from the rising relative strength line, and we're back above that 20 EMA, and it really outperformed today when a lot of stocks were weak. But we're still below that 50 SMA, so I want to see this continue to outperform, form some higher lows, and also just tighten up in general because we are pretty volatile right here, even as it is increasing in price. AOSL as well in that same type of space. You can see a gap down on earnings, so it's kind of a crapshoot here with earnings, whether we go up or down. There's not really an edge in guessing here, and we're below all the key moving averages. Also bringing up RMBS. This is just kind of down near its 200-day moving average, and we'll have to see whether it continues to be support like it was back in this area. But I don't like the look of the selling. You can see very high volume to the downside, and this looks like it needs a lot more work than GFS, and just needs time to get back above that 20 EMA, 50 SMA, and restart a potential uptrend. Moving on to the oil and gas stocks, let's take a look at Oxy here. And overall, we had recovered strongly and then kind of stalled there, but today we decisively pushed through here into new all-time highs. So this is basically the leading sector as of this moment. I think this is the leading stock within that leading group. Super strong action off that 50 SMA. And you can see on this pullback, it was high volume compared to this volume here, but it wasn't higher than average. But it was a very sharp decline, and I thought this was going to undercut the 50 SMA, but it held. But this break of this contraction kind of marks that this setup right here was over, but now it's kind of reset, formed a double bottom, and undercut this, and now is pushing into all-time highs on higher volume. Can't argue with price here, and we'll have to see how it acts versus earnings in 4 days. CVX as well, let's bring up that chart. You can see Chevron Group, similar action, undercutting that 50 SMA, but once again, approaching those all-time highs, so a little bit weaker than Oxy. Also looking at ExxonMobil. This is also into new all-time highs, so that's good. Also bringing up COP here, you can see after this pullback, we rallied strongly. The relative strength line is into new all-time highs before price. The overall RS rating is a 98, and this continues to be basically the leading group in the market. Moving on to MOS, which is a fertilizer. This was a leading stock, but did kind of break down and looks like it needs a little bit of time pulling back into the 50 SMA very sharply on high volume and above average volume. And right now just looks like it's maybe forming out the left-hand side of a base, but I don't like the steepness and high volume nature of this pullback. Moving on to some shippers, let's take a look at ZIM, ZIM, not ZOM. And overall, you can see it's forming out a stage 3 base here. Overall SBLK, let's take a look at that. This is very choppy, but pretty close to all-time highs, respecting those moving averages a little bit, undercutting the 50 SMA. But I think if you plotted a 65 EMA on this, it would have pretty much held right at these lows. And the RS line is leading it into new all-time highs. And we'll have to see if this continues to outperform basically the rest of the market as well as tech. In terms of potential true market leaders, let me know your thoughts down below in the comment section. But I am watching this LNTH, which is holding up really well after this earnings gap and is right near all-time highs after super strong numbers here and super amazing estimates for 2022, as well as fall through in 2023. I like the amount of funds here. You're kind of in that sweet spot here, just a few hundred that can easily move to 1,000 if there is a strong uptrend. And we've got Lord Abbott just starting a position in this most recent quarter. So definitely a name I'm interested in. And it may feel extended, but it's kind of a beach ball underwater as this moment, making basically new all-time highs or new relative strength, new all-time highs when the overall market is in a significant downtrend. So definitely a name on my radar. Let me know your thoughts on this stock as well as any others down below in the comment section. With that said, let's move on over to a few different sources of sentiment. And let's start with my Twitter surveys. I was pretty surprised this week, honestly, given how we closed, that we actually saw a subtle increase in bullishness from 28.9% to 31%. We'll have to see if we get another big flush and this gets down to that 17-18% that we saw in basically the bottom of the 2020 correction. But right now, pretty much unchanged over the past few weeks. Moving on to the name exposure index, this is actually increasing, but this was taken on Wednesday, the most recent reading. So we'll have to see whether this changed given Thursday and Friday. Most likely it did. And overall, we're still kind of in that middle range. I'd love to see a quick flush to 40, 30, even 20. Moving on to the Bulls versus Bears poll, you can see that the Bears are higher than the Bulls as of this moment. So there definitely is some fear coming into the market. But looking at the book call ratio, this still doesn't show extreme fear here. I'd love to see a nice spike to 1.15 and maybe stay there a few days. Maybe if we get one last leg down or just another leg down, we will see finally fear really come in to this metric. So overall, that's pretty much it for sentiment. And let's move on now to the IBD Big Picture article. And the headline is Dow Jones falls for the 6th week in a row, but these blue chips defy the correction. We're going to discuss the action here on this Friday in the overall indexes, a few different economic numbers down here, and a few blue chips that are acting pretty okay in this environment. But overall, their current outlook is still a market in correction. And you've got some leaders up in volume and some down in volume as well. And moving on to the GMI signal, it is currently red since April 12th, and the GMI score on Thursday was a 0 out of 6. So overall, my current view, like IBD, is a market in correction, and we'll have to see whether we get a quick flush or just a tradable rally that we can, take advantage of if we do see those bounces. But right now, I think less is more, especially for longer term position traders. You have to wait for that fall through day confirmation. If you're an intraday trader, you probably are loving this volatility. That's not my particular style. And I'm really waiting for that relative strength to start showing, new true market leaders kind of appearing, and overall leadership groups developing as well. And we'll have to see. But I think the one thing that is for sure is once we come out of this correction, there's going to be some amazing opportunities. But we do have to protect our financial as well as mental capital so we can take advantage of it when that does come. And that's pretty much it for this video. I hope you guys did enjoy my analysis. If you're watching this far, thanks so much for sticking around, and let me know down below in the comments what other types of videos you'd like to see during this correction. I think it's a great time to study create some educational material for you guys. So just let me know down below and let me know you watched all the way until the end. I really appreciate you. And if you did, please go ahead and leave a like down below and subscribe to the channel. And I'll see you guys in future videos. Have a great rest of your weekend, everybody, and take care.